Hello everyone, today is the 22nd of July. Bitcoin is trading around $119,000 and for almost 11 days now it has been moving sideways. I've marked the boundaries of this sideways range on the chart with yellow levels. Here they are. $117,420 and $119,841. And I have to say the situation is quite ambiguous. In general, a sideways market is the most difficult situation for any trader because it's very hard to determine where the next move will go. Yes, it could be a continuation of the trend upward in our case, but it could also be the start of a correction or maybe even a major reversal. And there are some very early signs of that. And now we're going to take a look at them. Before we start analyzing the chart, let's turn to the Kingfisher service, which I mentioned in one of the previous videos. So let's build the Bitcoin liquidation maps. Here is the liquidation map for positions with very high leverage. Take a look at what we have here. There is a rather dense cluster around the levels of $116,600 and $117,500. This suggests that the price could potentially move there. These are trades that were opened with very high leverage. So this zone acts as a kind of magnet. Just keep that in mind. Still, our analysis should be comprehensive, based on many metrics and market indicators on the chart, using additional tools, liquidation data, overbought and oversold conditions, and so on. Now let's look at the so-called liquidation map. Optical optics is balanced with both high and medium leverage. So it's hard to say where the market might go because there's this cluster zone and above it around $121,800, even up to $122,000. And there's also a spike around $116,500 to $117,000. And finally, let's make a liquidation map with all leverages, which shows data for all market positions. By the way, there is a very interesting picture here as well. Look, both to the left and right of the current price, there is, let's say, a dense but not very large cluster. This suggests that within the current sideways range, we could move in either direction and liquidate those who opened shorts above and those who opened longs below. That's the situation. Now let's switch to our chart. And yes, one more thing. There is this hex map that shows, let's say, how dealers will act if the price moves up or down. When the area is red, it indicates that dealers will support the price movement into this red zone, in this case, upwards. And the fact that this zone is red means that the movement would be impulsive. If it were below, then we would say that we expect, well, a more likely sharp impulsive move downward. But in this case, an impulsive upward movement is more likely. So this liquidation map, or rather the so-called hex map, indicates this. If we open Ethereum, everything here is red. This only means one thing: very high volatility is expected on Ethereum. But this map does not indicate any priority for the direction of movement. It could go either up or down. Well, now let's switch to the chart after all. What do we see on the chart? First, I'll point out two reasons why the market might go down and tell you where, and then I'll give a reason why the market could go up, aside from the data from the Kingfisher service. So let's switch to the weekly time frame. Here is the first reason why the market might go below the current levels. So last week, notice, set a new all-time high and closed with a red body. Candles like these, as a rule, tend to see a new low on the next candle or the one after that. In other words, within the next one or two candles, a new low usually occurs, most often already on the next one. And if we assume that this week we will set a new low compared to last week and we still have time, that means a move below $115,736, which was last week's low. Now, the second reason, this is the Chicago Mercantile Exchange where there is an untraded range, a so-called gap. So this gap is located around $114,000, and that's another reason why the price could go lower the price of Bitcoin. Usually these gaps are closed very quickly, but as I mentioned, we haven't been able to close this one for almost 2 weeks now, 11 days. What does this tell us? This points to another reason why it might turn out that the breakout from this sideways range will be upward. Because most likely there is some interested party, some large buyers, who may be preventing the price from dropping lower and who are using this gap as bait, as a magnet, making people open short positions, while at the same time holding the level at around $116.5, $117,000 and not letting the price reach $114,000. Therefore, strictly speaking, the situation is uncertain right now. That is, both those who open shorts are right, and those who open longs are right, but only under one single condition. I'm turning on the markup on the daily time frame. And look here, two yellow levels. If you want to open a short, then the right way to do it is either in the area of the $119,841 level or a little above it, but always with a stop loss. In that case, you are acting wisely because you are opening a short from the upper boundary of the range. If you want to open a long, right now it's not the right time to do so because it's absolutely unclear well. It's clear where to place the stop, but it would be very expensive for you. That is, the stop should be placed just below the shadow of this red candle. And if you do open a long, then the stop should be placed at least above the shadow of this green candle. And ideally, of course, above the all-time high. So, if you want to place your stop above the all-time high, then you should also look for your entry point somewhere around the middle of the shadow of this candle, around $121,600 or $122,000, provided that the all-time high is $123,218. So you take a long or try to open one only from the lower boundary of the range or a little below it, right? Well, I assume that we are still staying within the range. And you try to open a short from the upper boundary of the range or just a bit above it, always with a stop because the movement can be very, very strong both upwards and downwards. So at this point, I basically think we can wrap up the review. But there's one more important point I want to draw your attention to. Look, on the daily time frame actually there are 2 points. On the daily time frame we don't have any divergence. But if Bitcoin sets a new all-time high, goes above this zone around $123,218, then we could see a potential divergence, which would be a solid reason either for full reversal downward or at the very least for a correction down to $114,000 or lower. But there's one more thing. Look, after we set a new all-time high, we got a red candle that engulfed this green one. And this red candle essentially signaled the bearish engulfing or a bearish reversal. So at the moment, by formal indicators, the daily candles are pointing downward. And they will only stop pointing downward under one condition: if any daily candle closes above the opening price of this red candle. Well, as you know, the red candle's opening price is at the top and its closing price is at the bottom. And only under this condition can we say that the market has turned back upward. Therefore, by formal indicators, even though we are in a sideways market and trading within a range, the direction is still downward. Formally, it is downward. And the targets for this decline, well, the first target is the base of this green candle. But we've already been there, that's around $116,000. The next target is the middle of this candle, which is $113,500. The same $114,000. And finally, the third target is right here. How much is that? $111,300, the base of the green candle, or to test this high here, that's $112,000. That's it. The situation is extremely clear. It's clear that nothing is clear, but at least it's clear from which levels you can try to open positions. I want to emphasize, both those who open shorts are right, and those who open longs are right, as long as you open these positions in the right places with a relatively tight stop. Because if you turn out to be right and the move develops, then in the case of a short, you could end up around the $112,000 area, having opened somewhere around 120, right? So an $8,000 move is quite significant. And in the case of a long, you could open somewhere around $117,000 and ride it up to about 130. That's the upper boundary of the ascending channel. And our channel wraps up today's Bitcoin review. The next one will be about Tesla stocks, as I promised. Maybe even today. And please, leave likes or dislikes, write comments and subscribe to the channel. Goodbye.